Eddie Ghabour with me now. Eddie, look, you normally look at the big picture of the market, the overall big picture stuff, but I want you to look at Apple. What impact does this have on Apple, this ban on iPhones in China?
Look, I think just reconfirms the geopolitical risks that we have with China, and they've escalated to levels that we haven't seen in recent years. And this potentially is a big deal, not just for Apple, but other companies that do business in China. It shows how vulnerable we are to the fact that they can just snap their fingers and make a change across the board that affects and impacts demand. And this is why investors need to be aware of these geopolitical risks and find ways to hedge themselves. One hedge, in our opinion, that we've been doing is buying India. We think India is going to be a big benefactor of this business warfare with the U.S. and China. And that means more tech companies like Apple, look at Amazon, look at other companies are going to be investing away from China and into India. But in the interim, it takes a while for that transition to happen. It could certainly be a headwind for some of these multinational companies.
Give me an India stock that you put your people into and which is easy to get into. Give me a name.
So we use the ETF. So we are buying into the ETF for India. INDA is the symbol for that. We find the ETF is a very tax-efficient way for investors to get broad-based exposure. And India, to us, is going to be a multi-year growth story. Their economy right now is accelerating and heading upwards, and this is only going to get better for them as the tensions with China. So China's the loser in the long run. India will be the winner, in our opinion.
But real fast, you still like 5% treasuries for older people. Let's put it like that. Seniors.
Yeah, look, I mean, we've been forced to take unnecessary risks because rates were at 0% for years. Now investors and retirees especially can take a percentage of their portfolio, get a nice, handsome yield that covers the cash flow needs that they need to maintain their standard of living, and take the remaining portion of their portfolio in this uncertain time and take risk there. So you can take lower risk, in our opinion, and still achieve the goals that you need financially. And let's wait and see what happens here and let the dust settle. And then you can look to take on incrementally more risk. But hey, this is a change that I welcome. I think rates should stay where they are.
Okay.
Investors should get paid to save money.
Got it. 5% is attractive. Eddie Ghabour, thanks for being here, as always, sir. See you again soon.
Thank you.